Welcome to Market Call. Today it's Kim Bolton of Black Swan Dexteritas taking your questions on technology stocks. 1-855-326-6266 or email Kim right now, marketcall@bnnbloomberg.ca. Kim, great to see you as ever.
Good to see you, Andrew Bell.
We have seen, just talk to us about the weakness we've seen over the past few sessions in tech stocks. We are seeing some jitters. I mean, I know it's a volatile group. It is going to fall occasionally.
Well, I wouldn't just say it's technology. There's a bit of volatility everywhere, isn't there? You know, Andrew, you got two trades going on. You have the global reflation trade, which people are betwixt and between, you know, trying to paint the Federal Reserve situation as sort of caught between a rock and a hard place. You know, if bond yields continue to rise in response to all the stimulus and they're trying to protect the jobless thing, you know, the Fed might be forced to tighten policy too quickly. But you know, maybe a complacent Fed could pose, you know, overheating risks. So the Fed's really sort of caught between a hard place and a rock. But then you also have, you know, the stay-at-home trade that is, the stay-at-home trade boosted the technology side, but now you got the return to normal, and you have this purchasing of, well, taking some money off the table on the technology side and seeing it recycled over into the cyclicals, and you have some outperformance going on in the energy and the financials, industrials and materials sectors. But you do have some pretty important bullish catalysts coming up. You have the U.S. fiscal bill that looks like it'll probably be delivered in the next couple of weeks. And then you have that Johnson & Johnson emergency use authorization that's supposed to come up this Friday, and it's going to add another 20 million doses to the U.S. supply. So, you know, it's just all of these underlying factors are just going to create a lot of jitters, unpredictability, although we're getting used to that over the last year. So for us, we're sitting fully invested. We're sitting fully invested across 29 technology tech vendors and tech end users. Although we do have a 62% short equity hedge, which has been coming down over the last little while. So we're sort of protected on the downside, but you know, if the market continues to melt up, we'll make money there too.
Just looking at the Dow Jones, I know it's an imperfect measure, only 30 stocks, but the worst stock actually there is Home Depot. It's down 9% in the past week as of this morning. Apple down about 5%, Salesforce down around 4%. The Dow Jones itself flat over that 5-day period. Apple, so why would people bid Apple down 5% in a week? I know that's a very hard question to answer. There's a umpteen factors.
Well, Andrew, you know, Apple was up, what, 85% last year. And so
right.
There's nothing wrong. There's nothing wrong with taking some, you know, some profits and recycling it over into those cyclicals, you know, the stocks that are giving hope to the return to normal and, you know, due to the broader vaccine rollout. So, you know, to take some money off of some of the high flyers like Apple, like Google, like Salesforce, a lot of the softwares, you know, the software sector, and you can sort of use a barometer of the IGV ETF there. You know, over the last 9 trading days, it's off over 12%. So it's not as though, you know, people are becoming bearish on that. They're just using money from there to recycle over into the return to normal side.
Right. Yeah, that's interesting. Caterpillar stock has surged in the past week. Obviously an economically sensitive stock. Kim, we're so looking forward to having you for the next hour or so, 50 minutes now. Kim Bolton of Black Swan Dexteritas is taking your questions on tech stocks, 1-855-326-6266. Our guest today is Kim Bolton of Black Swan Dexteritas. He's taking your questions on tech stocks. The number to call 1-855-326-6266, 1-855-326-6266, or email Kim, marketcall@bnnbloomberg.ca. Peter in Burlington, Ontario sent us an email, Kim. Can you give us your opinion on BlackBerry?
Of course I can. Yeah, let me see here. We don't own it, and okay. I'm sorry if I say we don't own it. You know, we have a portfolio between 20 and 30 stocks, and we got 29 right now. There's lots out there that we'd like to buy, but we got to sort of stay focused. So, BlackBerry, we have a price target of $15, and you know, it's had some. On the one hand, it's had some problems on execution. On the other hand, they've had some very, very bullish things that have happened, particularly on the partnership side. You know, recently when they partnered with AWS Web Services, Amazon Web Services, to accelerate the development of their intelligent vehicle data platform, IVY. Which is actually going to run on the edge, like right into the vehicles. You know, that partnership has a lot of good promise, but it's always been an issue when it comes to the execution side. So we're watching very, very carefully. We want to see that execution. And it's always the way with a lot of these technology companies where, you know, they'll have a good business model, good intellectual property, but it always comes down to the execution. So we're watching BlackBerry.
We have an email from Michael. Twilio. What do you think of Twilio stock? I always think of Twilio as offering a way to, it's a web services company. It offers a way to integrate your messaging and your phone calls, etc. It provides services for business, I believe.
Yeah. So we own Twilio. We like this. You know, there's sort of the star performer over on the cloud communications as a service, CPaaS. You know, Gartner Research, the world's largest technology research company, actually has this as the leader in their top right-hand quadrant. So clients, developers, you know, they use Twilio with other software tools designed for specific cases to developing in-app communication mechanisms. And, you know, these communication systems are then used by the clients to, in turn, support their customers at various stages in the purchase cycle. So it so much helps with that closing of the deal. They recently acquired a company, Segment, back in November 2020. Segment is a market leader in the customer data platform market, and they aid in the collecting and cleaning and controlling customer data side. Now, it is expensive. If you own it, I'd hold on to it. If you don't own it, I would almost encourage you to actually look at a similar company, a smaller company, but a much more reasonable valuation, and that's with Bandwidth. They're just a smaller player in that. Yeah, Bandwidth. The symbol is BAND.
Sorry.
Symbol is BAND there, Andrew.
Yep.
And it's just a much more reasonable valuation, trading at slightly less than 10 times forward revenues. So, but for Twilio, we have a price target of $512. So it still has some runway ahead of it.
Okay, no problem. Bandwidth calling to you a bit more. Doug in London, Ontario. Fire ahead, Doug, please.
Yes, good afternoon. Kim, last time you were on, I think you had owned and were quite high on Qualcomm. I was wondering if you still own it. I remember you had said if you're lucky enough to get some in the low 140s, buy a third, 130s, buy a third, and your last third, if you're lucky enough, in the 120s. So I bought at 143. Yesterday, I missed my chance at around 133. Now it's quite a bit up from there. But I was just wondering if you're still high on it, what your projections are, and if that's still your motto, buy low 130s, 120s. Thank you. I'll hang up and listen.
Thanks a million.
Thanks, Doug. Yes, we still own it. We actually bought some more yesterday. And even though it's sort of traded down a little bit here, we still like this. Especially for the 5G deployment side. So yeah, buy it at 140, buy it at 130, buy it at down at 120, and this has the potential of being a pretty long-term hold in here. So you're doing the right thing, Doug.
Okay, let's take a break. Kim Bolton is taking your questions on tech stocks, 1-855-326-6266. Okay, we're watching Kim Bolton take your questions on technology stocks. Chris in Hamilton, Ontario. Go ahead, please.
Thanks very much for taking my call, and good afternoon, gentlemen. Unlike Kim's view on IBM, this is for my wife who, safety and income are important, and one of the reasons we have IBM is some technology exposure, but it pays for a technology stock a very good dividend. However, as I think we all know, it's missed its numbers, and it's been viewed as a laggard, and it was recovering, but now it isn't. So I just wondered what Kim would suggest, and would there be a point, say maybe 118 or something, which he would sell it regardless? Thanks very much.
Thank you.
Thank you. In the world of managing investments in the technology arena, there are investable stocks and then there's tradable stocks. And I always look at IBM as a trade and not really as an investment. So, we tend to look at, you buy IBM down at 120 and you sell it up at 140, and it's sort of been like that for a long time. But it's just so hard to actually get a clear investment thesis on IBM. They try awfully hard. They just entered into a partnership with one of the big AI players, Palantir. And so, but they have this legacy hardware side, which is sort of like a ball and chain that they pull around with them. So, you buy it down at 120 and you sell it up at around 135 to 140, but it's just not something that we would invest into. But we trade it.
A ball and chain. Why? There's no real profit margins in that legacy business?
Oh, it's a great business if you work at IBM, but it's just a difficult investable stock. I just find it. But we probably trade it once or twice every year.
Okay, let's stick to Hamilton, Ontario. Henry, go ahead, please.
Good afternoon, gentlemen. Please, Jemaya, I heard it described as a European-based Amazon of Africa. Could you please comment on the nature of the business? And it seems to be a bit of a roller coaster in terms of stock price. What would you do about that? Thank you.
Thank you.
Thanks, Henry. First of all, we don't own it, but I did want to talk about it for two reasons. Because we are watching quite a few technology stocks, both on the on the e-commerce side, also on the software side, and one of them is Jumia. Jumia, it's been around, but Henry, you're absolutely right that it's a very volatile stock. So you may want to. I'm just going to pull it up. I would, Henry. It's right now trading US just under $52, which is sort of the middle of the range over the last 3 months. But if you go out over the last year, it's had a very, very good run from about $5 all the way up to, got all the way up to 70. So it should have some support down here, right sort of between that sort of $40 and $45 level. So Henry, I'd look to sort of buy it down there. I don't think all this volatility in the marketplace is over yet. So Henry, I'd look to buy it $40 to $45 and maybe down, do a third there and then maybe another third down between sort of 40 and 35 and then between 35 and 30. I hope that helps.
Let's head to Vancouver. Peter, go ahead.
Oh, thanks. Great show. Andy, always a great host. And then my idol, the great Kim Borden. Thank you. Kim, I want to ask you about ASAN. You were very right on it. You said your target price was 42. It went to 43.67 and then come back. So what do I do? And then just, okay, thank you very much, my idol, Kim.
Thanks, Peter. Always appreciate your call. Thank you very much. Make me blush. So yeah, our target price is still up at $43. So let me just sort of back up. Asana is sort of the new work management type company. It's sort of the collaboration / work management space leader. They compete with the likes of Slack, Atlassian, Smartsheet, and currently it's trading at US dollars at just over 36. It's on the NYSE. We have a full position, and Peter, we actually bought some more when the market swooned yesterday. Growth has been faster than some of the other public companies in this work management space. The valuation is based on a company growing at 30% per year, but we think its growth for the next several years is going to be a lot higher than that. This is one of those companies that came in as a direct listing and just sort of sat there and fell under the radar. We picked it up, I recommended it, traded up, took some profit, came back down. We've got an average in here of about $33. What I especially like is the longevity of this company, because it's not just a flash in the pan. The co-founders of Asana are Dustin Moskovitz and Justin Rosenstein. You may remember those names because they were the ones that were the partners of Mr. Zuckerberg over at Facebook. Mm-hmm. So I think you can probably see it a little bit lower here, Peter, down sort of around $30 to $33. But if you own it right now, I'd hold on to it and look to take some profit up around between $42 and $43.
Top picks next. Kim was on our show February 14th of last year. It's past picks, not top picks. I misspoke before the break. You had 3 winners for us, including a double on a chip stock. This one did just fine. Applied Materials up almost 80%.
Thanks, Andy. Okay. Applied Materials. This is one of the companies in that whole semiconductor ecosystem. And just sort of try to picture it in that semiconductor ecosystem. It's really sort of made up of 3 kinds of companies. There's the foundries. The foundries are manufacturing, getting the wafers and manufacturing the chips. And then there's the fabless, what's called the fabless semiconductors, which are basically designers of chips. But then the third side is what is called the integrated device manufacturers. And they also have an internal foundry for manufacturing, but they also do their own designs. Now, the final piece of this are the supply equipment makers. Supply equipment makers usually sort of fall into 3 of them. KLA, Lam Research, and then Applied Materials. We made room for Applied Materials, and the symbol is AMAT. We have a 12-month price target on this of $132. So they supply equipment, services, and software for the manufacture of those semiconductor chips for electronics and flat panel displays and smartphones. They had a fantastic reporting back just last week on February 18th. Revenue was up 24%, and they generated $1.42 billion in cash from their operations. So you couldn't have asked for any more, and we really believe that 12-month price target is very, very achievable. The last thing you need to watch on Applied Materials. They're trying to acquire this Japanese manufacturer of mobile phones and other sort of wireless communication equipment, which is Hitachi Electric. So they really need this acquisition to really stay competitive. So if you own Applied Materials, keep your eyes open on that Hitachi Electric. Thanks, Andy.
We're tight for time. You did well on Taiwan Semiconductor.
Yeah. So everyone sort of knows about this. We still own it. We have this is one of the foundries. Remember I talked about the foundries, the designers, and then the integrated guys. Now, Taiwan Semiconductor are the kings of the foundries. They actually have a market share of 50.5%. You probably heard a lot about them. Apple secured 80% of TSMC's 2021 5-nanometer production. And so their position is being solidified. They spend about $21 billion in capital expenditures. So this is just something that you need to have in your technology portfolio.
You just need to own it. Walt Disney. That's been one of the best performing stocks in the Dow over the past week, and not a bad return. Let's have a look.
Yeah. So we still, there's a little bit left on this. We have a price target here of 204. And it's just sort of right under that 200 level. We actually picked it up. So in our portfolio, we have vendors, suppliers of products and services to tech end users. And then we also have tech end users, which are really legitimate technology companies. And Walt Disney actually falls into this. As soon as they came out and they talked about, their streaming services and adding to ESPN Plus and Hulu, and they brought out that Disney Plus, that's when we jumped on board, when everyone was sort of scared about the theme park side. But they projected back in November of 2019 that by 2024 that they wanted to have between 60 and 90 million. Well, lo and behold, in the first quarter of this year when they reported, they actually had 95 million paid users. So they were 3 years ahead of what they wanted. So anyway, we like this company. We'd like to see it lower, actually, to pick up some because we've taken a little bit of profit on it.
Okay, we will be back. Kim Bolton's taking your questions on tech stocks. We want to hear from some first-time callers. Don't be shy. 1-855-326-6266. Technology shares. Stephen, Macadam, New Brunswick, go ahead, please.
Hi, Andy. Hi, Kim. Thanks for taking my call. Kim, my question's on Absolute Software. I'd like to hear your opinion, please, on how it is today and where you think it's going in the future. I'll hang up and listen, and thank you very much.
Thank you.
Hi, Stephen. Thank you for the call. You know, we follow this. We don't have it in the portfolio. We have, but when it we actually picked it up during the swoon last March, and then we were too quick to let it go. So Absolute Software, and by the way, Stephen, we got a price target on this of $20.50 Canadian. So they're based out of Vancouver, and it's in the business of cloud-based platforms for both, you know, enterprise and public sector institutions. And the company specializes in management and security of computing devices, applications, and data. You know, they've been in the right place, you know, because of the, you know, the rise in remote work, and it should continue to go. And it's not cheap. It's however, it does have a rare sort of blend of growth and income for the shareholders. You know, the company still pays a dividend, which is surprising for a technology company like this, of 2.6%. So right now, I'm just actually looking at it on the NASDAQ, trading at $15. So, and we've got a price target here of $20.50 Canadian. Interesting company, though.
Okay. Okay. Absolute Software. Sheila in Calgary, go ahead, please.
I am a first-time caller.
Good stuff, Sheila. Thanks for calling.
I would like Kim's opinion on a company C3 AI Inc. I've had a great year, and I have followed Kim, and I appreciate his picks so much. But this one I'm not doing well with, and I don't know whether to hold it, buy more, or sell it. Thank you.
Thanks.
Well, it depends, and I'm sorry that you've had a difficult time, but here it's trading just under $125, and it's had a bit of a run here. It direct listed back at the second week of December, coming out right sort of around, I think it was around $94, and then, you know, shot up. Now, it was a direct listing stock, and so it sort of flew under the radar, and we liked it. And we spent a lot of time, I think I mentioned this before, about spending time with Gartner Research, and they really sort of put two AI stocks on a pedestal. one being C3AI and the other one being Palantir. And then actually talking around with some of the end users of their product at C3AI, we've sort of hung on to it here. We currently have a full position. We own it at around $118. And we've got a price target, a 12-month price target of $192. So I would recommend holding on to it, even down at these levels. Yep.
Okay. Sheila, thanks for that call. Let's get over to Nalan in Brampton, Ontario. Go ahead, please.
Hi, Kim. Thank you for taking my call. Good to hear from you again. My question is regarding Square this time. And, looking at their earnings yesterday, wasn't super impressed. I just want to get your take on this. I have it around $200. Do you think I should hold it? Do you think I should sell it and take profits and wait for it to come down maybe between 180 and 200? Do you think it's a long-term hold? And what is your take on the bullish sentiment around cryptocurrency with Bitcoin, at least that they're adding more position towards that in their portfolio? Thank you for your time, and I'll be sending off that gift I promised you, hopefully within the next week or two.
Thanks.
Thank you. Good to hear from you again. Square. So we took profit on this because we actually had a price target here of 279. So we took profit on it, and here it's come down over the last just this month, all the way down now to 240-ish. It should, and if you actually look at it, sorry, Andy, I'm just looking at the chart here. It has a great line going all the way back to March of last year. Charts really, really well. So it definitely should not go under 200 and probably not under 210. So, I'd recommend technically buy it here. Maybe buy a third to a half of a position here around 240. Maybe if you can get it, possibly it shouldn't go under 220, but get around 220 to 250. So just to sort of back up Square. So this is the merchant service aggregator, and it provides management tools as well as financing to small and medium sized businesses. They have tremendous innovation out there. They have a lot of competition in this, but they've also actually got into the Bitcoin side. Now, so I hope that helps you. We're a big believer in Square, but you also have to be able to find your entry and also keep to the discipline of your price targets. So if you can always give me a call if you have any questions about price targets. Now, just about the cryptocurrency.
Sorry, Kim. Yep. I'm going to have to cut you off. We've so many calls and questions. Going to have to take a break. We'll be back with Kim Bolton right after this. Kim Bolton is taking your questions today on tech stocks. 1-855-326-6266. We've heard from one first-time caller already. We want to get in some more. Mary in Burlington, you're not a first-time caller, but we always love to hear from you. Go ahead, please.
Hi, Andy. Hi, Kim. Thanks so much for taking my call. Kim, I have a local company, Evertz Technologies. I've held it for a long time, and the price is down about 25% from where I bought it. I wonder if you think it's worth holding on to or if I should let it go. Thanks so much. I'll hang up and listen.
Thank you.
There it is. Yes, we've well, we follow it. We don't own it. But I'm just pulling it up, and it's trading on the TSX right here at about $13. We have a price target, a 12-month price target of $15. So there's not much in it. And they were actually, if I remember correctly, they were involved in the film industry, and it's just as a software as a service in the film industry, and it's just sort of the film industry's just had a difficult time. So I would, Mary, I'd suggest that you actually sell a third, and if it goes up, at least you got 2/3, and if it goes down, at least you sold a third.
Right. So you're not pounding the table on that one. We have Mark in Ottawa on the line. Go ahead, Mark.
Kim, I'm wondering about battery stocks, and storage solutions and stuff like that. They are obviously planted into the wave of the future since the Paris Accord. And this is the way the future is going. So they got a long runway. However, I have trepidation on this because they're inherently dirty to produce and dispose of. Yet, the runway is so long, and the only people who are going to use these are G7 countries for the first, let's say, 20 years. Because, let's face it, smaller countries can't afford these vehicles. So what's your opinion? Thank you.
We're tight for time here, Kim. Electric battery companies.
Yeah. So Mark, what I would recommend is that you give us a call, because this is a pretty complicated subject. There are obviously electric vehicles, there's battery companies, there's a supply chain behind that, and then there's the whole charging side, which is really an interesting segment with EasyGo and ChargePoint. So Mark, what I would recommend is give us a call, send us an email. We have a bunch of research. I have 5 analysts now, and one of them actually just completed a whole segment around the electric vehicle, the battery, and the charging side. So give us a call, please.
Okay, we're going to take a break. We are going to have a look at those top picks from Kim Bolton after this. You're watching Market Call. Your first idea, Kim, Samsung Electronics.
Yeah, thanks, Andrew. So Samsung Electronics is again in that sort of semiconductor space, particularly down in the foundries. We actually purchased this off of the London Stock Exchange. You can also purchase it in South Korea. But we do it out of the London Stock Exchange because we find actually hedging, doing the foreign exchange hedging is a lot easier to do over there. So anyway, Samsung Electronics, they're one of the global leaders in the technology space when it comes to consumer electronics, appliances, network systems, and semiconductors and LEDs. They have a 42% market share in what's called DRAM. It's basically the memory chips in all of our devices, and they own almost half of that market share out there. But they're also involved into consumer electronics. When they reported recently, consumer electronics were up to 20%. Mobile communications, their cell phones grew 38%. So I'd buy it. The symbol is SMSN on the London Stock Exchange. I'd actually buy it right about here at about 1,855 for a third, add another third down at 1,755, and a final third down at 1,655. But remember to hedge your foreign exchange exposure.
Okay. Okay. Your next idea, Adobe.
Yeah. So this is something that everyone should have in their portfolio, but it is a bit rich, but it still has some runway left. So it's currently trading on the Nasdaq down around 460, and we have a 12-month price target on Adobe of $563. So I'd recommend, buy a third here at around 460, and and possibly down around 440, and then another third at 420. And it has some very, very good support down around sort of 400 to 410. So Adobe, it's a one-stop shop for product design, content creation, marketing, web, mobile, e-commerce. You got to love this company when when a company actually has a verb for what they do, and that's that photoshopping. So three reasons to own Adobe: well diversified, clean balance sheet, and on a discount cash flow model indicates that the stock price is fairly valued right here.
And your final idea is Palantir. That stock up around 14% this year.
Yeah. And it does have some volatility. But this is, again, together with C3 AI, are really the leaders when it comes to artificial intelligence. And I know you hear this a lot, but basically Palantir, we have an analyst in Silicon Valley. And the reason we use Yuri, he actually gives us a sense. I talk to him every Friday afternoon, and he just talks about the movement of people. And we picked it up at the end of last year in December when it came out on its direct listing, mainly because everyone wants to work there. Because it is the cutting edge when it comes to artificial intelligence. So they have two sort of platforms. One is for government, and that's called Gotham. And the other one is for commercial business, and that's called Foundry. And so it's just artificial intelligence, algorithms that is proprietary to them, that helps people make better decision making, and it works. BP has picked them up. Rio Tinto has picked them up on the commercial side. The governments around the world love the Gotham platform for their data analytics. So, you can buy, I would recommend buy half a position here around 26. And if you're lucky, get the other half down around 22. And we have a 12-month price target of $38.
Kim, we'll leave it there. Thank you very much indeed for joining us.
Thanks a lot, Andrew.
Kim Bolton of Black Swan Dexteritas taking your questions on tech stocks. Before we hand you over to Bloomberg Markets, let's check in on how equities are trading today. Now, Jerome Powell, the Fed chief, coming to the rescue, really, of markets, testifying before lawmakers. He reckons that the US economy still a long way from full employment or maximum employment, and people taking that as a signal that he's going to keep applying the magic of monetary stimulus, low interest rates, distorting the credit market. So you can see earlier yesterday, the US stocks were down, then they rallied late in the day on reassuring words from Jerome Powell, and that seems to be working again. However, Bloomberg does note that the US 10-year bond yield got to 1.43%, still pretty low for a 10-year holding, but that is the highest since February of last year. Let's check in now on oil, because oil was up sharply in trading earlier today, hitting a new one-year high. There's speculation that global markets are tight, that supplies, or the global stockpile, there's an accelerating drop in global inventories as demand comes back. And we mentioned this on commodities. The latest data from the Energy Information Administration in Washington indicates that US oil output, this is temporary of course, dropped below 10 million barrels a day last week after that deep freeze swept across crucial oil producing regions of the States, notably Texas. We've got stockpiles again, according to Bloomberg, at a big European storage hub of oil dropping to their lowest since last fall. So there's been speculation about $100 crude in the next year or two. Maybe we could put up a 5-year chart. I can't even remember when we last saw $100 WTI. That was quite a while ago. You'd have to go back. I'm guessing no, you have to go back further than 2017. Yeah, what am I talking about? So there's a 1-year chart. So $100 oil, well, that would be a cash flow bonanza for the Alberta players who've cut back their expenses so much. Yep, the last time I have $100 oil was way back in 2008. Okay, thanks very much for watching our show. We'll be back tomorrow.